almost 2 years. And then we started up again. We made an investment in Casa, which is Bitcoin only. We made it in Bitcoin. It's a great on-ramp for Bitcoin. It's the cheapest way for people to get coin and do dollar cost averaging. And it's a great team, and they're very Bitcoin-centric. And so now the pendulum has swung away from the ICO market and swung away from the alt market and the blockchain market, these things, and it's come back now full circle, I believe, to more Bitcoin orthodoxy, which is more where we're comfortable. So we've started to make a few more investments again. I started a company called the Hollywood Stock Exchange, and this was a virtual exchange using a virtual currency. So we had to create the idea of digital scarcity, and I have a patent on digital scarcity. It's patent number 5950176. It's called the Virtual Specialist Patent from 1996. And so I'm aware of this industry and virtual currencies and digital scarcity. And so when it was introduced to me in 2011, that is Bitcoin, when it was $1 by John Matonis, who came on Keiser Report to talk about it, I immediately saw it as the next generation or the next level beyond what we were trying to do in 1995, 1996. So I started buying it and supporting it and getting into it. So I'd already had a background in virtual currencies, so it was pretty easy to get into Bitcoin. I own gold, silver, and stocks. So I own stocks. I've had stocks I've owned for 30 years, going back to the 1980s. And we started buying gold and silver in the 2003 period. In the year 2000, gold had bottomed out at around $250 to $300 an ounce. We're talking about it on Keiser Report and buying gold in the $400 an ounce range. And we did a campaign a few years ago called Crash JP Morgan Buy Silver. And the price was, we got the price up to $50 as a result of that campaign. The price has come off. But I own a lot of silver. I own a lot of gold. I own stocks. I own a lot of Bitcoin. So I have a lot of different stuff. Report. We talk to a lot of financiers and bankers and brokers and money managers, and in particular the people in the media like Jim Rogers and Peter Schiff. Peter Schiff and I are about the same age, and we have a similar background. We both worked at Schiff and Lehman for a while. We both got started in the brokerage business kind of in a similar way. And we have a lot of rapport when we see each other in person. He stuck in with being kind of, stockbroker his whole career. I did other things, I did many other things and had different kind of parts to my career. But when I start talking to him about Bitcoin, as I said, at $1, $10, $100, and saying, kind of walking him through it and talking to him about it, and he was always interested in it, and he thought, but he never bought into it, and he started to kind of at some point, I think when it broke 1,000 and then it got up to 5,000, I think he started to figure out that he needed to. I think he started to believe that if he just closed his eyes and stamped his feet, it would all go away.
Right.
I think he thought it was because, he never bought into the internet either. He's never bought Apple. He's never bought Microsoft. He's never bought Amazon. He's never bought Netflix. He's always bought gold mining stocks in essentially foreign gold mining stocks outside of the U.S. dollar and gold, right? That's pretty much 90% of everything he's invested in, maybe some China stocks. And he's always, during the dot-com bubble, he never owned any dot-com stock, et cetera. So it didn't fit with his brand, right? So he's got a certain brand. And, to have a good brand, you have to be very consistent. Yeah. And I think he figured, I really don't need to be in this Bitcoin thing. It's not going to hurt. It's not going to help my brand. But then when it just starts to take off like it has, it's such a glaringly bad choice not to get into Bitcoin, because all the arguments against it don't work really. And every year the arguments against it work less and less. And, he looks worse and worse, right? So this is going to go on for another 10 years, right? I don't think he's going to change his mind. And the price is going to keep going up. And, he's just, it's never going to change. And I call him something of a human pinata, right? Because you can beat him with the Bitcoin stick, and the candy just keeps pouring out, right? You never lose. You know, you can never lose bashing Peter Schiff's Bitcoin position because he's always wrong. Buffett is an old guy, really, and he technology stocks either, really. I mean, he got into Apple very late in the game,
yeah,
and they also Apple, you know, they have hundreds of billions of dollars worth of cash. They're buying back their own stock, so I don't think he's buying it really for the technology. I think he's buying it for the ability for the company to engineer a stock appreciation and dilute, you know, and to take part in that more than anything else. But with Peter, you know, he is he's part of that gold bug crowd that seems to think that Bitcoin and gold are completely separate and you can never mix them together. Like in the Ghostbusters movies, you can't mix the streams, or something bad will happen, right? He's got the gold stream and the Bitcoin stream, and he's you know he doesn't want to cross those two streams. But it gets harder and harder to defend that position. Store value position has always been there, but it hasn't always been as obvious. But now it's becoming more and more obvious, and so he just starts to really sound bad, and it gets worse and worse, really. I mean, it's particularly on social media where it's just, you know, he's not gaining any traction with his arguments, really, but he is raising awareness of Bitcoin. So I think he's kind of a useful idiot in that way, in that as long as he's out there talking about Bitcoin, that's more people are going to hear about it. So it doesn't matter if he's wrong or not. They'll get that bug in their ear, and then they'll hear somebody who knows what they're talking about, like myself or somebody else, and then they'll be educated, and we'll get another user. During the dot-com era, so when the internet was launched, really the commercial internet as we know it was launched in the mid-1990s when the Netscape browser went public, the company went public, and you know suddenly it became a consumer item, and America Online came into existence. And at first in Hollywood, you know, there was a lot of the attitude toward the internet was that it was a fad, that it wasn't going to last. That Paul Krugman at the New York Times said it wouldn't have any more impact than a fax machine, and that it had a lot of negative connotations. Executives in Hollywood wouldn't have an email address on their business card because they thought it made them look too geeky, right? They wanted to look hip, slick, and cool, so they didn't want like that. And all the web addresses were always http://www. Right? And so then Blair Witch Project came out, which was a total phenomenon of the internet, and it was made for like $300,000. It grossed $200 million, I think, ultimately. And suddenly, boom! Everyone in Hollywood was like, "Oh my God, now we get it." So in Bitcoin, it's similar. You know, you have 5 or 6 years where people are saying it's a fad. I don't get it. What's the point? I don't need it. And then someone like Paul Tudor Jones comes around and says, wait a minute, if we're going into an inflationary environment and we're going to see massive, you know, money printing is going to explode and become uncontrollable, and there's a risk of hyperinflationary collapse of the dollar, then I want to own gold, and I also want to own what he called the fastest horse in the race, which he called Bitcoin.
Right.
And so that puts the entire hedge fund industry on notice because they're all competing with each other, right? There's like 8,000 or 10,000 hedge funds, and they're all seeking uncorrelated trades to create alpha, to create percentage gains for the year, to attract more money to manage. And so they can't ignore it if Paul Tudor Jones, who's like the dean of hedge funds in Wall Street, I followed him very closely in the 1980s when I was a stockbroker. If he says, I'm going 2% into Bitcoin, now, just to remain competitive, they've got to take a position. And I think Paul Tudor Jones, in my opinion, I think within a couple of years, he's going to be like the biggest guy in Bitcoin. He'll have the biggest position in Bitcoin because the more he digs into it, the more he realizes there's a 40x return yet on the table to be made in Bitcoin.